Hey everyone, thank you for joining us today. I'm Eleanor Lawrence and I'm a member of the 121 team here in Hong Kong, and I'll be moderating the webinar today with Peak Rare Earths. So I'm joined by Bardin Davies, CEO, Russell Scrimshaw, Executive Chairman, and Matthew Horgan, Head of Corporate Development and Investor Relations. If you have any questions throughout the presentation, please write them in the chat box and we'll address the questions at the end of the presentation. So to begin, I'd now like to pass over to Russell to kick us off.
Thank you, Eleanor, very much, and welcome everybody. I'm pleased that you've taken the time to listen to our story today. If I could just make a few opening remarks, and then I'm going to hand across to Bardin to take you through the body of today's presentation. So in the last 20 months or so since I've been the executive chair of Peak, we've made some tremendous strides. Just to name a few, we've put our framework agreement in place along with our mining license. We've signed a 7-year offtake agreement for all of our production, which I don't believe anybody else has managed to do in this space. We've expanded our mining license area by around 3 times. We've discovered significant deposits of phosphate, niobium and fluorspar, which we'll get to in the short to medium term. We've changed the economic well-being of the community. We've restructured our board and our leadership, and I strongly feel we have the best-in-class organisation in this space. And we've set up our local subsidiaries with the government having a 16% free carried interest, but more importantly, aligned with everything they do now that everything that we do now that they're our partner. And the list goes on with other things that we've achieved. And still, in my opinion, we are drastically undervalued in the market. Our project is shovel ready. We ran a process, as some of you may recall, with Macquarie earlier this year to seek partners. And it was Shenghe that provided the right mix of funding, intellectual property, experience, and an optimal design for us to go ahead with our project. No one else has managed to do all of those things. We are the only rare earths developer to have a pathway to a full funding. And of course, in order to get a full funding, you need an outstanding deposit of materials, you need a full offtake agreement, and you need some significant upside. Remembering also that our material is bastnaesite, not monazite, which is most often the development material for Australian and other international projects. Bastnaesite happens to be the primary Chinese produced material as well. It also happens to be the material that MP produces in the United States. They just happen to have an 8% Shenghe ownership as well. So we realise we've got a multi-generational and a multi-product project here, and we're on the cusp of getting this thing going. Just a few words about Tanzania. Some people I know are sceptical a little bit about Africa. Tanzania is a 60-year, very stable democracy. It has an incredible undeveloped wealth of mineral resources, but it's also very successful in its agricultural sector. And as many of you may attest, tourism as well, with Australians flooding in there on an annual basis. And may I say that Australian mining companies are also flooding in there. There's a lot of players now in graphite, nickel, and many other things. Also, it's probably worth asking yourselves, why China? Why have we done a deal with China? Other than, say, MP Resources in the United States, which, as I said, Shenghe is an 8% owner, no one else outside of China has got the skills and experience to concentrate and refine rare earths into an oxide. Others have tried and have had severe development problems. We are very confident we have the right partner. So to develop this project now, this is the time. We're at the bottom, or near the bottom, we hope, of the pricing cycle. And we expect if we begin development soon, we'll be taking advantage of the uptick in the industry. Shenghe, of course, will have all concentrate for 7 years. But if we go downstream to, say, a carbonate, then they have a right for a minimum of 50% of our material. And I can tell you from my experience in other mining industries, 7 years for our agreement will go by extremely quickly. We're going to need their skills in operation. So you'll notice in our term sheet that we've announced they have a 55-45 economic value of the project for the first 5 years, including losses, of course. So hopefully we don't have any, but should we, they will take 55% of those as well. They are also incented to reduce CapEx below 220 million. Remember, our feed is at 287 million CapEx. And so they have a significant incentive to get our CapEx down. And they also have a significant incentive to reduce our time into construction and operation. Importantly, we at Peak retain board control of our parent, Peak, and of course, the UK subsidiary into which Shenghe is investing. Remember, they bought in at 99 cents. They never wavered in their commitment to us over the last several years. Clearly, they do not want control, and they're extending their standstill agreement with us at 19.9% in Peak out to 2027. So we think we've put together a pretty good set of terms that'll leave us in great stead to build this project quickly. And our firm intention is to get to a decision on financing by the end of this year so that we can begin construction early in the new year. That means we've got a lot of work in our team to get subscription agreements, shareholders agreements, run a project development tender, and to which, of course, Shenghe will be a serious bidder. So with those few words, and we're happy to answer questions at the end, Barton, could you just take us through some more details of the term sheet that we've announced to the market?
Thank you, Russell. I've just brought up a presentation. I hope that everyone can see that clearly. So for those of you in Australia and Asia, good afternoon. For those in Tanzania, habari za asubuhi, or good morning. Draw your attention to our disclaimer. So our partnership and signed term sheet with Shenghe provides the Naguala project with an integrated development and funding solution. Naguala now is without doubt the most advanced rare earth project in the world. Naguala has already been substantially de-risked with a special mining license, a framework agreement with the government of Tanzania, a completed BFS update and feed study, and a binding 7-year take-or-pay offtake agreement. With the signing of this term sheet with Shenghe, we now also have a fully funded project solution, and that entails a $96 million investment by Shenghe to secure a 50% interest in our UK Naguala holding company, with the balance of construction and development costs to be met by a Shenghe arranged debt facility, and most importantly, no requirement for Peak shareholders to contribute further equity funding to the project. Our partnership with Shenghe, which Russell has touched on, is both transformational and multifaceted. It provides us with a binding take-or-pay offtake solution. It provides us with a complete project funding solution. It enables us to leverage Shenghe's rare earth development expertise through an engineering, construction, and development solution. It also enables us to leverage Shenghe's technical expertise to further optimize the project and the flow sheet and reduce costs. And as Russell also touched on, it enables us to potentially collaborate around a future mixed rare earth carbonate refinery in country. So given the smorgasbord of rare earth development projects around the world looking for capital, why is Shenghe willing to focus its time, capital, and resources on the Naguala project? And the answer to that is because they regard Ngualla as the best undeveloped rare earth project in the world. So we've set out the mechanics of our fully funded solution on this slide. So the first point to note is Shenghe will inject $96 million into Ngualla Group UK. That corresponds to an implied peak share price of 36 cents, which represents a plus 100% premium to our pre-announcement share price. Then the balance of Ngualla's development and construction costs will be met and funded via Shenghe arranged debt facility. The expectation is that that debt facility will be on much more attractive terms than you would typically find in an international project financing facility. So the combination of Shenghe's technical and funding support mean that Peak shareholders will benefit from a technically enhanced and lower cost Ngualla project that is fully funded with no requirement for shareholders to contribute further equity funding to develop the project. The term sheet has been structured to leverage the strengths of Shenghe to create strong alignment of interest between Peak and Shenghe, and most importantly, to protect the interests of Peak shareholders. So we're leveraging Shenghe's strengths by the delivery of a competitive and low-cost EPC, EPCM or EPS solution. We're forming a joint owners team that will further optimize the project and look to reduce both CapEx and OpEx. We're going to utilize Shenghe's technical expertise as well as its access to reagents, low-cost plant, equipment, and engineering solutions, and then potentially collaborate on this future downstream mixed rare earth carbonate refinery in country. To incentivize the delivery of cost reductions and to boost near-term earnings, as Russell has touched on, Shenghe will have an entitlement to 55% of profits and losses at a Ngualla Group UK level for the first 5 years. We've also incorporated a combination of incentive and penalty instruments into any EPC, EPCM or EPS solution. And that's to support very material reductions in CapEx as well as to expedite our development schedule. From a governance perspective, key protections for Peak include equal board representation at a Ngualla Group UK level, but with Peak retaining a casting vote. Both Shenghe and Peak will be entitled to appoint one director to the Mamba board, but Ngualla Group UK will also appoint a director as well as chair, and you'll remember that we've got a casting vote at that level. We're extending our existing standstill restrictions, which limit Shenghe to a 19.9% stake until the end of September 2027. And we've also incorporated some industry standard right of first refusal mechanisms. Finally, the following conditions precedent have been agreed. So first of those is Shenghe being awarded either an EPC, EPCM or EPS solution, Shenghe delivering an attractive and actionable project financing solution, Chinese regulatory approvals and approvals from both sets of shareholders. So our partnership with Shenghe is based around synergies and complementary strengths. So Peak strengths include a deep understanding of the Ngualla project, the team's significant track record in developing and funding international and African mining projects, our significant Tanzanian experience, our relationship, our detailed understanding of the regulatory regime, and our strong commitment to ESG best practice. Shenghe, on the other hand, brings deep rare earth expertise and experience. It delivers an offtake solution. They've got a very strong track record around developing and optimizing bastnäsite projects, which is what we've got at Ngualla. They've got access to low-cost plant, reagent, and engineering solutions, and a very strong balance sheet with attractive funding. So Peak is very much distinguished from its rare earth peers by having a well-capitalized and technically proficient partner in the form of Shenghe that can deliver a complete offtake development and funding solution, and that is something that none of our development peers have. So a little bit more about Shenghe. They're our largest shareholder with a 19.9% stake, and they've invested in excess of $45 million into Peak. They're Shanghai listed, they're a non-SOE, they've got a market cap of around US $2 billion. They are the largest importer of rare earth concentrate into China. They're internationally recognized for their rare earth expertise, particularly in bastnäsite mineralization. And they're also in the process of acquiring Strandline's Tanzanian mineral sands portfolio. And as you can see on the bottom left-hand side, internationally active. So we think they are uniquely positioned to add significant value to the Nguala project. Importantly, Shenghe has a proven track record in collaborating with MP Materials around the start of the Mountain Pass project in California. Now, that project was restarted as a high-grade bastnäsite concentrate operation, so very similar mineralization to us, a very similar development strategy. Shenghe played a critical role in the restart of that project, augmenting its 8% shareholding with a 100% offtake solution with significant technical and funding support. So with the assistance of Shenghe, MP was able to optimize its flow sheet, boost grade and recoveries, and expand production. And now that MP has got that operation fully optimized, they're now in the process of moving downstream. So moving from the production of a high-grade concentrate into the production of NdPr oxide and high-strength permanent magnets. Now that's going to create a very substantial void in the concentrate market, and a void that we are uniquely positioned to fill, particularly with the assistance of and support of Shenghe. From a timing perspective, we've agreed to collaborate and work together with Shenghe on expediting documentation and the execution of binding legal agreements, working together to satisfy conditions precedent as quickly as we can. Importantly, working together as part of an integrated owners team to further optimize the project, take out CapEx and OpEx, and then work together to deliver a final investment decision before the end of the calendar year. So ladies and gentlemen, that concludes the formal part of the presentation. I think we'd now like to open the webinar up to questions. Thanks, Eleanor.
Thank you both for your presentations. And yes, our first question today is, can we elaborate on profit sharing mechanisms? Would this cover any profits from phosphate and fluorspar or just REE? What happens after 5 years?
So it covers all commodities within the special mining license. So that for the first 5 years, that would extend to other critical minerals. Once we get to the end of 5 years, we revert back to a 50-50 split between profits and losses.
Great, thank you. And another question we have coming in is, how are we going to utilize the 96 million? Is it safe to say for the development of Nguala?
So that $96 million will go into Nguala Group UK. The only interest that Nguala Group UK has is an interest in Mamba Minerals and Mamba Refinery. Those funds will primarily be used to fund the development of the project, but those funds can also be drawn upon to do things like additional exploration and fund the working capital and expenses of Mamba Minerals.
Okay, great, thank you. Another question. What, if any, progress has been made on the sale of Teesside? When can we expect this sale to complete, and what is the expected potential proceeds?
So we've formally launched a sale process for Teesside. We've engaged a commercial real estate agent that's very active in northeast England. We've got a number of parties that are interested. We've also been working with a green energy advisor. In terms of proceeds, I think the total cost for Peak of Teesside was around £2 million. our expectation of sale proceeds would be multiples of that number.
Great, thank you. How are discussions on other partners on phosphate and fluorspar progressing?
I might pass over to Matthew Horgan, who's sort of been leading the charge on that front.
Great.
So discussions with other parties around our broader critical minerals are progressing very positively. We continue to have very close and regular dialogue with Minjingu Mines and Fertiliser, who we have a MOU in place around the development of phosphate from Nguala. We met with the Minjingu team whilst being here in Dar es Salaam. They remain very positive around the broader potential for phosphate development at Nguala. We have recently sent a large bulk sample to Minjingu to be tested at their labs here in Tanzania, and we look forward to those results in the coming months from that testing.
Yeah, I mean, I think one of the things that was sort of, very interesting, I think, in our discussions with Minjingu is the strategic location of Nguala. So Nguala is located within the southern tablelands of Tanzania. That's a major agricultural area, major food basket for Tanzania. And so it hasn't just been the high grade nature of the phosphate. It's also that strategic location that is something that is very interesting for Minjingu.
Thank you both. Another question for you, Bodin. Please, can you give us a bit more detail on the CapEx incentives for Shenghe?
Sure. So Russell sort of touched on some of this in his opening remarks. So when we put out a FEED study end of November of last year, we came out with US 287 mil. But when we put that number out, we did flag that we saw a number of areas for further optimization. One of the most important things that's happened since the finalisation of that FEED study is that we've been able to expand our special mining licence from about 18 square kilometres to around 50 square kilometres. And so that's provided us an opportunity to reconfigure the project. And by being able to reconfigure the project, what that has allowed us to do is to relocate a lot of the infrastructure, storage and buildings from the top of the hill down to the base. So that's facilitating a very substantial reduction in CapEx. There could be an opportunity to go one step further and actually relocate our tailings storage facility. And if we could do that, that would be a very material reduction in costs. Some of the other sort of areas where we've identified CapEx reduction opportunities include optimizing contract packages. So previously, when we did our FEED study, we were assuming separate civils, concrete, bulk earthworks, contract mining. And so now what we're doing is we're packaging those up to deliver the best pricing outcomes. We were originally looking at building a new airstrip. We're now going to refurb the existing airstrip. Importantly, we had very conservative plant availability estimates, both in our BFS update and FEED. So that was at 80%. We've gone and done a benchmarking exercise, other projects in Africa, and we think 88% is more achievable, which is still at a significant discount to the 93% that you typically see in Australia. We're adopting a much more Tanzanian African approach now to buildings and storage facilities, really just getting a lot of those unnecessary costs out. And then in terms of working with Shenghe, we see that there are a number of larger opportunities. So, we've had the Shenghe team to site. They've been very positive about their site visits, the technical work that they've been doing. They see an opportunity to further optimize the processing plant, particularly around moving from a two-stage to a one-stage flotation process. So all of that is very positive. In terms of the term sheet, We thought it was important to create strong alignment of interest between us and Shenghe, and the way that we've done that is to heavily incentivize them to deliver a capex outcome below US 220 mil, and to also deliver them bonus payments if they can get construction below 18 months, and then a further bonus if they can get it down below 12 months. And then the counter to that is that penalties kick in above our feed number of US 287 mil.
Okay, thank you for that. Another question. In your discussion with Shenghe, how have they expressed their prioritization of the Ngwala project? You've had a long-standing relationship with them. Do you sense their excitement?
Absolutely. They've had a big team look at this. They're very consistent with us. This is the best undeveloped rare earth project in the world. And their view is this will be the next rare earth project in the world. So in their view, this will be the next project globally to be developed. And compared to all of the other rare earth development projects, we've actually got a strategy where our project is technically de-risked from an offtake perspective, regulatory perspective, and now a funding perspective, and no one actually has that. So if anything, you know, Shenghe is moving incredibly quickly. So I think it's clear that you know, this is an absolute priority for Shenghe as an institution. Russell, you might want to add some comments and perspectives.
Yeah,
to
I'll
that.
just add a couple of points. The two gentlemen you see in the photograph that was in the earlier presentation, the signing, those two gentlemen, the one on the right is the founder sitting with me, and the one on the left is the vice chairman of the company. It was them personally that were negotiating with us. So yeah, they're the biggest individual shareholders as well in the company. So, you know, they really want this to happen. They've been pushing us. We've been pushing hard back as well to get something that was the right thing for our shareholders. Unfortunately, we've been in a regime of lowering prices in the industry for across the critical minerals chain, and everybody's been, you know, under that pressure as well. But interestingly, Shenghe have got a couple of other things going in Tanzania. They're committing themselves internationally to Tanzania in a large way. As Barden said earlier, they're in the process of taking over the Strandline assets in country. Wigu Hill, I believe, is in their sights as well. But clearly, the focus is our project, and they've tested the heck out of the material. We've sent them quite a lot of this material over the last couple of years, and they think they know how to make it optimal through the process that they would help us put together. So they're pretty excited by it, but they've got to do a lot of work over the next 4 or 5 months with financing approvals and the like. But you can bet that that they really want this to happen. So we're pretty excited with the outcome. Albeit we all would have loved a much higher share price, but we're not in that period of time right now. It's much better for us to get going and build this project and be in a position to take advantage of the rising prices when those times happen in the industry.
Thank you. And we have 2 more questions now for the Peak team. Is the 36 cent per share valuation linked solely to the 96 million contribution?
I think we negotiated this term sheet in its totality. So certainly, as Russell said, we would have liked a higher number than that, but I think we needed to balance the value add that Shenghe was bringing from a technical, from a development, from a reagent perspective, and most importantly, a fully funded solution. So I think one of the challenges often for mining development companies is the perception of a large overhang leading into funding. What this transaction will do is it will remove that overhang because there will be no requirement for us to go to our shareholders to go and fund the development of the project. So yeah, look, the 36 cents, we believe that the project and the company is worth more than that. But in the totality of the solution that Shenghe is delivering us, we think it's a very good outcome for shareholders.
Okay, the final question today is for Russell. Peak appears to trade at a significant discount to other projects, yet it has materially de-risked many aspects. When thinking about why this is the case, what comes to mind?
Well, look, this project's been around, as some of you can attest, perhaps on this call, for more than a decade, and there've been a lot of promises made. It's actually really only been in the last 2 years that we've made significant progress. But I think what people are looking for now in this difficult economic climate, especially for critical minerals, is certainty. So people are still sitting there scratching their heads, saying, "Oh yes, this is a non-binding term sheet," or there are conditions precedent over this thing or that thing. And all of those are true, but just look at the track record of what we've achieved by ourselves and in partnership with Shenghe over the last couple of years, and their significant developments in the future of the company. So I can't speak for how everybody else feels about it, but in my personal view, and I think many of you would know, I put a good deal of personal money into the last raising, as did a number of our other board directors. We're very confident in the future of the company. Like many of you on this call, I don't like the share price being where it is, but that's a combination of where critical minerals are at right now, and the history of things that have happened over the last decade or so. But hopefully we can attract some new people into the stock who see this project for what it is, and it is an outstanding project. So we have to deliver now over the next 3 or 4 months and be ready to start construction as we get through to January next year.
Okay, we've actually had a couple more questions come in from the audience. You mentioned that with Shenghe, the ability to access improved debt terms. How do you see this playing out, and what impact could this have on the NPV of the project?
Pardon? Do you want to tackle that one?
Yeah. So, we were originally running a dual track process. So, that strategy entailed a Shenghe development and funding solution. And then we were also pursuing a more international EPCM and funding solution. So around that international solution, we'd recently announced US 177 mil of indicative funding appetite and a signed term sheet from our financing consortium. So that was an important development, I think, an important external validation of the project. But in terms of our conversations with Shenghe, they have delivered confidence that they can deliver something materially more attractive. So, and that could be a combination of interest rates, tenor, and other conditions. To the extent that we can deliver more attractive, lower cost debt, yes, that will have an impact on our valuation for sure.
But also, I should add to that, if they can materially get the capex down as well, that's going to help the NPV significantly. And part of what we're looking at is a significant reduction in OPEX as well. Let's not forget that. And additionally, they seem incredibly confident, and this remains to be seen, but they're incredibly confident they can build this much faster than the Western design that we had put together. So all of those things together, including the funding terms and conditions, we hope will lead to a much improved NPV. And in fact, when you think about it, for them to make these commitments in this low price market tells you that they think this is a profitable project, let alone a great project. They believe, and we believe now, that we can still make money at these low prices in the industry. And fingers crossed, the industry pricing model goes upwards from here.
Okay, another question for Bardin. When looking at your vision for the business in 3 years, what do you see? Do you envision Peak being a multi-commodity business in 3 years? How have your discussions been with the Tanzanian government on the longer-term ambitions for Peak?
Okay, so 3 years from now, I would hope that we have ramped up. We've constructed. We've gone through commissioning. We've ramped up production. We're on our way to fully optimizing the rare earth project, and I think there is certainly the potential for us to have, at a minimum, started the development of a phosphate project. So we've said to the market for a long time that we see Nguala as both a multi-generational and multi-commodity. We've got a plus 24-year life of mine supported by JORC compliant ore reserves, but importantly, those ore reserves account for less than 20% of our resource base. So absolutely a multi-generational rare earth project. And then, of course, we've been delivering some very interesting high-grade intercepts of phosphate and niobium and fluorspar. And we absolutely see the potential for co-development of critical minerals within this deposit. In terms of government support, it's fair to say it was a robust negotiation with the government around finalising a framework agreement. But once we actually signed that framework agreement, the messaging from government was very clear. We are now partners. We're partners in Mamba. We're partners in the Nguala project. And you need to let us know what we can do to help the project. And we're already starting to see some of the benefits of that. The Nguala camp is in the process of being connected to the power grid through TANESCO. We've seen more maintenance and repairs on some of the regional roads by Tarura. So we're certainly seeing the benefits of strong government support.
Thanks. I think the final comment and question today, Bardin, congratulations on an outstanding outcome when the industry is at a cyclical low. As shareholders, what are the 2 or 3 key priority signposts we should look for in the next 5 months?
Okay, so the timeline to completion of our arrangements with Shenghe is an important one. And we see a whole series of milestones leading into that. So finalisation, execution of binding offtake agreements. There will be an announcement around that. We're targeting shareholder approvals for both us and Shenghe completed by the end of October. As we've outlined, we're doing a huge amount of work around further optimising the project, and we will certainly be keeping the market abreast of that. So we see a lot of exciting milestones as we get towards our final investment decision before the end of the year. And at the same time, we remain very interested in our critical minerals program. So Matt's talked about some of the discussions that we're having with Majingu. We're certainly having discussions with other parties, and we'd like to continue to put some meat on the bones around that critical minerals strategy. But Russell, you might have some additional comments.
Not really, other than to say there is a lot of work. Let's not kid ourselves in putting all of these agreements together and negotiating the right outcome for Peak shareholders over the next several months. But there's common will from all parties to get this done. So we know it's in our interest to do this quickly and get started on construction quickly. There's a lot of effort going to determine the whereabouts of key pieces of equipment that we need. And now that we've expanded our mining license area, that actually gives us an opportunity to, as Bardin said a bit earlier, to reconfigure that processing plant and take advantage of gravity of the hill that's there, and reducing power costs, pumping costs, and the like. So there's a lot to be done, but you can bet it's all hands on deck. And most importantly, what we've got is a pathway. We know exactly what we have to do now, and that pathway is clear. and the support of our partner is clear. We've just got to make sure we negotiate the right T's and C's for us in the longer term, and we will. If you look at MP Resources and the partnership they've had with Shenghe over the last 4, 5, 6 years, you know, they've greatly improved their grade, they've greatly improved their recovery, and you know, a lot of that knowledge has been brought to them by Shenghe. So all of those things are opportunities for us. You know, the good news is, you know, what we're telling you is the start of the story. There's a lot of opportunity beyond this. So all I can really say is watch this space. You can bet we're working as hard as we possibly can. Barden's been in country now with Matt and others for good month, or almost a month, and every day is more than a full day. Hopefully he gets to have a quiet dinner one night and relax, but you know, there's no relaxing for the next, you know, 4, 5, 6 months until we get to announce an EPC M or S contract, and we get into construction.
Okay, if there are no more questions, I will wrap this up here. I'd like to thank Russell, Barden, and Matthew for joining us today. If you have any queries, you can get in touch with my team at 121 or the Peak team directly. And this presentation was released to the market yesterday and can be found on the Peak website. Thanks everyone for joining.
Thank you.
Yeah.
Bye-bye.